Um, Thank you for joining our session today, where we'll be discussing personal finance. I'm happy that we are all here. I'm hoping that we are going to have an exciting session. My name is Olayinko Yetunji, and I'm not here alone. So I have Ben with me, and I also have Ola with me. Ben and Ola, can you just
everyone?
So we know that you can speak.
Hi everyone.
Hi.
Good evening, everyone.
Good evening, Ben. Okay, so we're going to go straight into the session. Let me introduce our panelists today. Ola is a vice president at Parthian Partners, and Ben is a wealth manager at Stanbic IBTC Asset Management. I think we can start. Please, if you have a question, can you let me know in the chat room so we can take your question?
Hello. Is it safe to assume that the equity market is at the bottom of the curve at this point? And is it safe to assume? I know it's very risky at the same time, but if one is taking a chance at this point, do you think it makes some kind of sense to go in at this point?
The truth of the matter is, you may never tell when it has bottomed out, because if you observe the market during the course of this week, you see that some prices of securities went up, some went down, and all that. So the thing is, compared to where these securities used to trade before this COVID period, you find out that most of them are trading significantly lower. So you want to go in at any point where you feel that you are comfortable enough, such that when the market corrects itself, that capital gain, you will have benefited from it. But of course, we don't know how long this will take. But that Nigeria Stock Exchange, some of them have even come out and posted very good results, good dividend payouts and all that, but yet they are trading at this level. So it shows that they are significantly lower. It does be a good entry point.
And to add to that also, there's a consideration of security selection. So some companies will do well, like I said, and some may not. So if you decide to go into the equities market, you need to be sure that the companies you are investing in are the ones you expect to do well given the economic environment. So because if some companies end up dying in this whole process, then your money is gone, even though the equity market rises in the end. So security selection at this point, the actual names you're investing in also matters a whole lot beyond the expectation that the all-share index will rise.
Okay, thank you very much, Ben and Cindy. Ben and Ola, I hope we've been able to answer today's question. Is there any other question in the room? I have this question in the chat room that says, what app can you suggest to track income and expenses?
So for that, there's some banks have some apps, like when you're spending, they give you a summary of how you're spending or what you spend money on. I mentioned to Yinka on the side that I actually do personal finance coaching. And one of the things I do for people is that I help them decide on what personal savings model works for them based on their personality. Some people can't do budgets. Some people can't stick with that, going back to the budget all the time. So there are different ways you can actually save depending on, and there was a question in the previous chat about this works for someone who has regular income, where you have a budget and all that, but some people don't. So for that kind of person, you could have a percentage of income approach to saving, where for every income that comes into your account, I move away 5% or 10%, and that goes straight to savings. Now, your income might come twice a month, it can come every 6 months. But once that money comes, big or small, a certain percentage goes into your savings, and that will work for someone who has regular income. I actually have an assessment tool, and I will share it with Yinka, and she's willing to share with her people. You could like assess yourself. You fill some questions, and then we'll get back to you which tool suits you best. But with respect to tracking your income, actually, if you go on Excel, actually there are personal budgeting templates on Excel. Like if you go into the template section, you can actually get that. It can be that mundane, and then there are apps also, but we find that most of the apps are not done locally, so they sort of do not fit into Nigerians as we are and as our finances are structured. It just doesn't jive well, but I'll speak with Yinka how much we can collaborate with our community on that. But there are tools available.
Okay. Thank you very much, Ola. I'll reach out to you on the assessment tool, and then I will share it with all the registrants for this session. Do we have any other question?
Okay. My question goes to our panelists. I think both of you are into investment and stuff like that. So let's say as a young guy, I have 1.5 million naira, and I will definitely not need it in the next 2 years, and I want to invest. So what will you advise me to do? Let me put it that way, because I've been trying to study all those agri markets, which I think bring more returns in Nigeria, like all this agri investment stuff that they say you invest in a farm, and after some 9 months, but I don't really want that. I want something that will last for close to, let's say, 2 or less than 1.5 years or 2 years. So what's your advice for me as a person?
So I would say if you really do not have time to track your investments and all, and you just want to put away 1.5-2 million for the next 2 years, I think you should look at putting it in investments that probably not too risky, since you need this money back. 2 years is such a short term. So for me, I would advise you look for a low to medium risk mutual fund investment option that that is actively managed, that can help you meet your objective, and knowing fully well that at the end of 2 years you are able to get your money back. With respect to putting it into the other kind of investments, farm crowdy, or I can't remember the nation. Yes, it's good, but if you know that you still need that money back, I think the risk is too high. Probably maybe you want to reduce your exposure in that area. You can put money that you can do away with, but money that you still want to have access to, and it still means a lot to you. It's better to put them in more secured investment option, and putting them in probably maybe a mutual fund that invests majorly in bonds at this time may not be a bad idea.
Thank you very much, Ben. I hope your question has been answered. And I have this question, Ola and Ben. Someone is asking that, do you think there will be opportunities for startups to raise funds at this time?
So the startup market is very dicey right now. It honestly depends on what kind of thing you want to start up. Because if you want to start up something in transportation when everybody's on lockdown, it's not going to work. You won't get funding. So your ability to raise capital at a time like this is highly dependent on what you are selling, what business you are running. Because even businesses that, let me put to you like this, even banks that are standing strong, right? Their offshore lines of credit are being cut or suspended on the back of this COVID-19 thing. this is not because they don't believe they can pay back, but because everybody's just being careful and pulling back, right? So that you will get fresh funds into a business idea that is just an idea or is just starting off, that hasn't been tested. You must really be doing something that is profound, that will meet people's needs, people's current needs in this situation. And if you have that business idea, I think it will thrive. You will get funding.
Thank you very much. Okay, someone is asking that what are safe investment options apart from mutual funds and bonds?
Every investment comes with some element of risk, and that's just the truth. So the ones you are calling safe investment, probably maybe the ones that the risk are probably minimal or next to zero, right? How I like to look at it, the investment, the securities that we have generally in the markets that we invest in, is so broadly can be classified into two categories. Either you're investing in equities or you're investing in fixed income. So equities are your stocks, and those ones are volatile, the risks are higher, right? Fixed income securities generally are securities that will give you some level of fixed return on your money, but the risk is lower, and those are the ones that people tend to call relatively safe kind of investments, because there's no volatility. What they promise that they're going to pay back to you at the end of the month or year is what you're going to get. So those fixed income securities are further broken down into bonds and money market securities. The bonds, okay, you already know bonds, we've been talking about bonds. Then the money market securities are further broken down into your treasury bills, commercial papers, and even the regular fixed deposits that you have with the banks, basically. So those are the investment securities you have. The low risk mutual fund would basically invest in either bonds, money market, or a combination of bonds and money markets. Basically, those are still the investment securities or investment vehicles have low risk that you can consider in the market.
Okay, thank you very much, Ben. Dauda has a question. He said that, what's your take on Zoom shares?
So the thing about the market is this: the market is very finicky. So Zoom can declare massive profits this year, but competition can eat into that profit by next year. You can also see that there's a lot of talk about how Zoom is not safe, security issues, blah 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 blah. But we all agree that everybody's ignoring all that because there's a need. We need to get this done right now. Blah 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 blah. Now, so when it comes to equities, right? I always try to get in ahead of the noise. Once everyone is already in the noise, I sort of am wary, except if there's something that I think can make the value go higher than this. Not what we can already see. Now, if what we can already see is priced in, me buying their shares is helping the person that got in 2 months ago to bank their profits. I might not be able to get out at the same levels. So that's the way I see equities, and that's how I would analyze Zoom, right? So if you have information that will tell you that Zoom, there's still a future in Zoom in terms of there's still a way to sustain this level of revenue beyond COVID, then I would say put money in it. But if this is an opportunistic positioning, meaning that after COVID, everybody goes back to normal, then you now find Microsoft Teams making their own more competitive. Look at what Zoom is doing. So everybody has Microsoft. You don't need to do Zoom. Just click on your Outlook and you just connect. Once all that comes in, where you don't have to go create an account with Zoom, pay extra for longer than 40 minutes, then the question is, will Zoom make this kind of money next year or the year after? If you can answer that question, well, if your answer is yes, then buy. If your answer is no, don't buy.
Interesting. Okay, so I have one question.
Okay.
Investing in stock, do you think local stock are better at this moment, or one should give foreign stock considering Nigerian currency too? Even though I think we've touched on it, but maybe we could just answer that briefly.
I think there's still an opportunity in the Nigerian equity market. However, if you're investing in equity, you need to be sure you have the staying power, because equity investment is usually suitable for the long term. And like Ola already mentioned, you need to look at securities or stocks of companies that you know that their line of business or areas that they are into are still going to make money even in the not too distant future. So if you look at the economy the way it is, there are some organizations that are still making money, some industries that are still making money even right in the midst of this lockdown. The likes of the telcos, they are making money. The pharmaceuticals, they are making money. So you want to gain exposures in those kind of securities. You also want to look at organizations that currently are trading below their values. So, for instance, we know that banks, come what may, they are still making money right now to some extent, even though it is reduced, because most of the expenditures or spendings that one would do are still going to make them through these banks, whether you like them or not. So you want to look at those kind of sectors that you know that are still making revenues at this point in time, and you want to gain exposure into them in preparation for long-term. I'm stressing the fact that because it's equity, long-term capital appreciation. That's how I see it. In respect to the foreign stocks or foreign investments, well, if you understand them that much, if you understand the fundamentals of the companies you want to go into, then it's fine by all means. But of course, it's a lot easier to relate with organizations or companies here in Nigeria than over the world.
Okay. Thank you, Ben. Thank you for answering the question. As we begin to round off on our discussion today, I really want to thank you all for listening. I thank the panelists for spending time with us. I mean, we've learned a lot. Ben, what will be your parting words? And then Ola, you can also take your parting words.
Okay, my parting word would be that with respect to your personal finances, there's no hard and fast rule to it. That's the truth. They always say that the best time to plant a tree was yesterday, but the next best time is today. So if you have not been putting a lot into your savings or having an emergency towards your medium-term, long-term plan, the buffer that can carry you through. Thank you.
Thank you so much, Ben. Ola, what will be your parting words for us?
With respect to this whole COVID thing, I would just say that it's not the end of the world. This is not new. It's just the package that is coming in is new. But the whole economy slowdown, uncertainty, it has happened before. You can read different versions of the world and all that. So if you've not seen this movie before and you are wondering how it will end and will it end, you can be sure that as long as we are all alive here, it will end, right? And if you were not appropriately positioned for this one, be determined that the next time it happens, I will be appropriately positioned. Now, what you earn is what you earn at every point in time. But what you save is within your control. right? To an extent, yes, you understand bills, blah 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 blah. But like Yinka said, when she was tracking her expenses, she realized that some things she was spending money on that she realized she didn't really need, right? But so the truth about it is, you have to build yourself up so that the next time something like this happens, it doesn't catch you unawares. So don't think that this is the end of the world. You will find that people in their 70s and 80s are taking this thing less serious than the younger ones, because it has happened. It has happened before. A different package, but it has happened, right? The economic impact has happened. The uncertainty, the jobs, the low oil prices, all that, it has happened before, right? But there's a way. You can get through it. You'll be fine. Everybody will come out in a few years' time. It will just be history, Just learn, make the adjustments you need to make for this time, and everything will be all right, really.
All right. Wow, thank you, Ola. I mean, those words are energizing. Thank you for letting us know that there's light at the end of the tunnel, and that we can be deliberate. We can start making changes to what we do. Thank you so much for everyone for spending an hour with us. We really appreciate it. We don't take it for granted. Next week, we are going to have another interesting discussion. We'll be talking about the career skills for the new normal. I hope you are going to register when the invite is shared. Thank you very much.